Hello everyone. How was your trading last week? Today's video is about how to effectively filter noise. We'll still be using the 3 time frames, 4 hour, 1 hour, and 15 minute. So, first off, we always start by looking at the highest time frame first. The 4 hour time frame. It's in an uptrend. This is the key level on the 4 hour time frame. As long as the price hasn't broken through this key level, the 4 hour trend remains an uptrend. The current price has returned to this key level, and a pin bar has formed, which is extremely beautiful in this case. So, there's a high probability the trend will continue upward. The price will likely bounce back up. Or, will the price now break through this key level? Let's look at a bigger picture. An even larger one. Suppose the price just reached here. If the price is here, above this peak, and it retraces to this low, if the price returns to the key level, like in the previous case, then we'd be uncertain. But currently, the price has already reached this peak. Let's move to this side. This isn't a price zone. It's not a key level at all. So, we can conclude the price will likely continue to rise. How far will it go? At least up to here. This key level. We can confirm the current trend is still an uptrend. The price is likely to touch this key level and bounce strongly upward. This is the 1 hour time frame. The price has returned to this key level. A reversal candlestick pattern has appeared. It's absolutely beautiful like this. Okay, let's move to the 15-minute time frame. On the 15-minute time frame, there's also a beautiful reversal candlestick pattern. So, should we buy? In this case, and target up to the previous high here? When you've been in the market long enough, there's something called market sensitivity. You might be able to buy in this case, but I advise against buying because the current trend, the smaller wave, is still a downtrend, so let's wait for confirmation. This is the key level of the smaller downtrend. Let's wait for the price to break through this key level, then we can confirm the retracement. The downtrend has ended, and the 4 hour uptrend will continue. I can confirm. The price has now broken through this key level. So, the downtrend has reversed into an uptrend. It's following the 4 hour time frame trend, so let's look for a buying opportunity. The price retraces like this. Measure Fibonacci. The price retraces to the Fibonacci ratio of 0.5 to 0.618. If we assume we're buying, we'd have to place the stop loss here. This is a safe stop loss for us to enter the trade. Place a buy order. The stop loss in this case is too wide. So, at that point, I placed a limit order here. This is the order I entered, targeting the previous high up here. My first limit order. At that time, I set the RR ratio at 120. It's likely the price will rise from here. So, my order didn't get filled. cancel the order and look for a new opportunity. In this case, I couldn't find any buying opportunities. I couldn't identify a key level. This zone isn't it. This random movement isn't it. Here. It's not clear at all. So, I didn't enter any buy orders. And the price continued to surge upward. Now, I'll show you a different chart for the same case. And this is the new chart. If I analyze this chart, I could have entered a buy order. This is the key level. This is the previous high. I could completely apply the principle of trading for busy people. Place a limit order here, stop loss below 16 pips and buy upward. If I had bought this order, I could have targeted this previous high with an RR ratio of 115. But I didn't look at this chart. In this case, we can see that this is an engulfing candlestick pattern. I could have entered an order in this case. But entering an order in this case wouldn't be as safe as entering an order like this. Stop loss behind the key level is much safer. Let's move to the next opportunity that I missed. If I only looked at this chart, we can see this is the key level. The price has broken through this key level, indicating the trend has reversed from an uptrend to a downtrend. So, should we look for a sell order in this case? Before deciding to buy or sell, look at multiple time frames at once. This is the 1 hour time frame. And this is a false breakout. Because it's a false breakout, I consider this a double top pattern. And the market moves like this. The 1 hour trend is still an uptrend. This is the key level on the 1 hour. This is the previous high. We could place a limit order. In this case, stop loss below the key level. Target up here with an RR ratio of 1 to 4. We could totally do that. So, we confirm. On the 15-minute time frame, this downtrend is just a retracement of the 1 hour time frame. In some videos, I've entered both buy and sell orders based on retracements. So, if we enter a sell order based on the retracement, in this case, what happens? Where to place the sell order, I don't know. It could be up here, down here, somewhere. But the safe stop loss must be placed above here. The target. At most, we can only go down to here. But the price might reverse at this point. So, entering a sell order in this case, we wouldn't have an advantage. We won't enter orders based on retracements. We'll enter buy orders based on the larger trend. The 1 hour trend is in sync with a 4 hour trend. And a buy order in this case is very good. But I didn't do that because this order had a stop loss of 55 pips. It's been a long time since I entered orders with high stop losses. I only enter orders with stop losses below 20 pips. So, I predicted the price would reach this key level. I placed a limit order here, stop loss set at about 16 pips. Targeting up here with an RR ratio of over 16. I missed another opportunity in this case. Because I was greedy and had too high expectations. You can see that. The price moved in this case. Exactly like the previous case. The price returned to the previous high. A reversal candlestick pattern appeared. An engulfing pattern, and the price continued to rise. Okay, now let's move to my losing trade. Because I missed quite a few good opportunities. This is the 4-hour time frame chart. It's in a downtrend. I'll consider if this downtrend will continue downward. This is the previous low on the 4-hour time frame. The price is currently halfway here, so I thought it would continue downward to this key level. Then I would look for a selling opportunity in this case. This is the 1-hour time frame. It's also a downtrend. This is the key level on the 1-hour time frame. This is the 15-minute time frame. And this is the key level on the 15-minute time frame. Then I enter day. Sell limit order in this case. Set of 15 pips here. Targeting down here. The price hit my order entry point and dropped sharply like this, so I confidently held the order. But in the end, I got stopped out. The reason I got stopped out in this case is very simple. I misidentified the key level. This wasn't a key level. Let's look closer. In this case, we can see green candles, red candles. Green is larger. Then it broke downward, but immediately shot back up. Then red, then green. Green, then red. It keeps alternating green, red, green, red. If we look at this case, I didn't pay attention here. Look at a higher time frame. Just one time frame higher, the 30-minute time frame. It's not a key level at all. I misidentified the key level. And that's why I got stopped out in this case. So, how do we enter a correct order in this case? I won't say more. I'll just show you manually. Everyone, watch and draw your own conclusions, because I think doing it this way will improve our judgment skills, okay? Let's start. That losing trade, I didn't learn much from it. Because that mistake wasn't new to me. But I hope through this, everyone gains experience in handling situations like this, to avoid losing money on similar mistakes. The more mistakes you avoid, the fewer traps like this you fall into. The narrower your path to losses becomes. You might notice, there are times when the market doesn't favor us at all. Losses can be minimized, but they can't be avoided. But that's not a problem. We make money in the market over months and years. Short-term losses are something everyone encounters. The key is how much you learn from losses. If you lose but learn something valuable, it's not really a loss. That's why I always advise everyone, when you lose, review the trade carefully. The trade you just lost. Learning from your losing trades is the shortest path to success. Goodbye, see you all in the next videos.